Friday, January 20th, market analysis, Stan Ehrlich. Good morning, about 9:45 in the middle of the trading day in California. I usually start out with the S&P 500, the spider. I will again today. If you have any questions about what I'm doing, why, etc., anything, email me at info@ersignals.com. Let's get rolling. Here's my index screen, and I always have the daily data chart. I don't need much. The last few weeks maybe showing on the tall vertical column on the left, and then right to the right of it is the 1 minute chart, which, as you can see, the S&P is now going sideways for the last few hours. And we'll talk about that. DIA, daily, and 1 minute. QQQ had a bearish sell signal 2 days ago. Official ER automated trading system, new short sell signal. And to the right of the daily, the 1 minute. Down below the NASDAQ futures, same scenario, and the Russell 2000 down in the middle also had a major bearish ER sell signal 2 days ago. And then to the left, we got the E-mini on the daily data on the left and the 1 minute just next to it. Okay, going to the S&P 500. Let's talk both sides of the market here a little bit. I have been expecting a major bottom formation for weeks and weeks now. And I thought it was going to be around the end of January and maybe the first week of February for the lowest low for what I think is going to be a shoulder low for a large 7-8 month head and shoulder bottom formation, having its first low, the first shoulder low, on June 17th. October 13th is blatantly obvious because of the bullish engulfing. My green automated trading system caught the bottom of this market to date. And it rallied up very nicely to the major bear trend line, got almost overbought, ended up with a minor double top at 410.49, and that's the second little high here on December 13th. Dropped down. Now, is that 3 or 4 weeks sideways trading range in December and the first part of January the last shoulder low on the head and shoulder bottom? It would have been a little too soon, about a month too soon, and it would have been a little bit higher than I would have liked. This light blue circle, cyan circle, represents the time frame and the price level at which I'm looking for a low. So I'm expecting to see another break, and a fairly sharp one, for the next week and a half or so, of about, from here, maybe 30 points. 92 is where we're last, 392, and I'm looking for 66. So yeah, 25, 30 points in that ballpark. And right at the very end of the month, January 30th, would be idealistic. We'll see what happens. One way or the other, I do think this market is in the process of bottoming out. I do think we're forming a major long-term bottom, and I do think we're going to see a bull market starting, if it hasn't already, meaning October 13th, and or the last shoulder low in December. Now, if I'm bullish immediately and no downside correction happens in the next couple of weeks, then what? Well, today we did go up enough to finally close the small gap that was left over from yesterday's down day. So that gap is closed. No reason to pop up anymore. We're back up to a minor area of resistance. Actually, it's pretty good, but it's not that well established. Right around 393.10, say. And that is because of the lows during this topping out formation, which again tested the major bear trend line, historical resistance, and formed a double top, and down we went. But this time we barely got overbought. The day before, we had a bearish engulfing in some indexes and a whole bunch of sectors and a lot of individual stock issues. So that was a great significant sell signal. I have to allow for the market to come back on a retracement, which would be fairly normal, And we have not quite gotten as high as that would be, maybe 94. So is the rally high we've seen so far today of 92.5 it? We're bumping against resistance. We closed a gap. The market is starting to go sideways. It's been a couple hours, not that long. And I should have resized my screen. And there we go. So the spider is trying to make a new high as we speak, coming up fairly nicely. But again, at a major turning point, the high or low to the tick or to the hour, to the minute, it doesn't look like the market's turning. But in retrospect, 2020 hindsight, that was it. I can't tell yet. If we start moving down below 391.50, 391.50, I would be much more optimistic that we have seen the end of this minor little rally, and the next move is to make a new low for the trend down in the last few days. On the other hand, of course, I've already talked about this. One other comment I didn't make: the 200-day Dow Theorist long-term moving average is not that much higher. It's trading around 96 now. It is still trending down because of the bear market, has not turned up by any means, and it won't for months because it takes a long time to have this trend line, moving average rather, change. But crossing over it and staying over it for any length of time, when we did already for a couple days, we did it again for a couple days. That's twice now. Before, we just bumped against it. That was back in August. So too much strength is going to cross over and above that moving average. Maybe the long-term bear trend line also, that would be even more bullish. Closing above the highs of the last few days would add to the potential bullishness. And we're only at 401 at the moment. But the ultimate is closing above 410.49, the highest high since September. That would change my mind. I would be forced, in effect, to turn bullish if I hadn't already, for some reason. But I can't yet because this little bounce up doesn't look like it's going to have legs. I think it's going to turn back down. Now, having said that, the Dow Jones Industrial DIA, I also cover, has tested support area already. Could have a bullish engulfing today because it got below yesterday's low, but it wasn't anywhere near oversold, so it's not going to have a green bullish engulfing like we did on many, many markets on October 13th, the October lows. But it did gap down from, maybe it's an exhaustion gap. I doubt it. I don't think so. And a bullish engulfing might be a little more friendly than I'd like. So it's a little iffy here. But getting below today's low and staying there would kill all those ideas. And I'd be expecting a new low for the move down. And we're on our way down in everything, probably. The QQQ, it had a gap to close like the spider. It closed the gap really quickly this morning first. And it did have an official outside down day bearish engulfing Ehrlich reversal. And it is extremely close to the trigger price to go officially short the automated trading system. So we came super close. Sometimes we don't hit the trigger. Sometimes we come close and it works. Sometimes we hit the trigger or maybe a little higher and it works great. And of course, sometimes it doesn't work at all. We'll see. Period. Now, the spider has been, Qs have been crawling up a little bit more firmly, have made a new high for the day so far just recently, and have got a little bit of an upward slanting channel. Not the case in the DIA. It's just sideways. In fact, in the middle of the range of the day so far, and the spider is caught in the middle. It's kind of close to the highs, dropping off a hair at the moment. Again, I want to see that drop down to 391.5 or lower, stay there, and close at that or much lower levels today. Be great on a Friday at the end of the week. Enough said for stock market indexes. One way or the other, long-term bear market situation, I think, has changed, and I'm looking for a major buying opportunity very soon or a major bullish breakout. I think we're going to have the dip down first and then the breakout. Futures, here we go. I'm going to start with, that's not supposed to happen. Hang on one second. rearrange things. Very good. And I'm going to start out with gold. It's gotten overbought lately. I told you not to chase it up. It is a new high. So it's frustrating to watch it go up, which is what I was expecting, but I thought there was going to be a little downside correction first and then new highs. So the longer it stays overbought, the more likely it is to have a sharp break unexpectedly. And if you're long, I'd be very concerned about taking profits. If you're not short, I'd be looking for new reasons to go short. And we don't have any quite yet, except for being overbought. We are in a bit of resistance. Price range wise, it's not super accurate. I'm looking for a downside correction in a bull trend. Next chart, high grade copper, pretty much the exact same commentary. Maybe it'll come back down to 4 or a hair under. Next, wheat. We caught the top at the beginning of the war because of the series of limit up moves and the way the market moved. My ER signals is based on a customized version of relative strength, which you see at the bottom of almost all my charts, as well as a version of a bullish or bearish engulfing. They're not exactly the same as the original definitions or the historical definitions, but they're very close. Now, live hogs, oversold, starting to rally today, did break into new low ground. But being oversold, I mentioned it is likely that it's going to bounce. Well, here it is. But I think it might come up a little bit more, maybe a hair above 90 or a little below 90 at 85 right now. So I'm bearish, but I'd like to sell a rally. Next, coffee, exactly the same comments. It did already rally, and it came up a little bit into a modest resistance area, and it looks like it might be ready to start to make new lows. No signals yet. We're not overbought or oversold at the moment. We were oversold, therefore the rally. I'm bearish, looking for new lows. Probably take a week or two. Question is, am I going to get a decent new short sell off or not? Let's find out. Coffee. Now this is oats. OJ. A few days ago, I was starting to talk about a head and shoulder top. It is looking more and more viable in terms of the formation. This spike little high on the 13th of January is at about the right time, and the high price is also at about the right price. So that's the equivalent of my little circle on a shoulder high forecast that I'm trying to make on the S&P that's coming up in the next couple of weeks. So we'll find out if that works. This one would have done fine. Now, we need to break down below the blue neckline, and that should happen within the next few days. Downside gaps on head and shoulder patterns crossing the neckline frequently have three things. Sometimes they gap down below the line, or there's a gap involved in the day, gapping down and then all of a sudden crossing the line needs to stay below the line on a close. Secondly, volume is usually very high. Typically, you're breaking into new low ground for various time frames and hitting a lot of sell stops, which could be offsetting longs and or getting into new short positions. And thirdly, it should be a fairly large range day, a really nice big down day. So it's a big down day on heavy volume and sometimes a gap. We'll see what happens on OJ. Obviously, I'm turning bearish and looking for a head and shoulder top to work. Soybeans, we had an outside down day, bearish engulfing ER sell signal just on Wednesday of this week. I said so on the day it happened. So far, this is doing great, including a rally back into the middle of the range, approximate middle of the range, and got short on the ER3 as well as the ER1, which is always in a trade. ER3 waits for a retracement to get in a trade. If there is a retracement, it'll miss a trade many times, or a signal, I should say. We're more on board in every case now. This is a new low and a new low close, and it's the second down day after the sell signal on Wednesday. So far, so good. Next, heating oil. Overbought in an area of resistance, big sideways trading range. I'm a little bit bearish for a little bit of time frame. Otherwise, longer term neutral. Next, E-mini is, as well as being a index, is also a futures contract, as obviously. And October 13th was my whopping great day. I'm so tickle pink I started talking about October lows way back in August and September. So we may have pegged on October 13th the beginning of a long-term bull market, and that's exactly what I think. But now, in the next several weeks, we've got to make higher highs and stay there and then move up some more. And then the longer-term indicators will begin to change. But I'm good with short-term indicators. That's my forte. Right now, obviously, I want this little rally to stop and turn back down and make minor new lows. Next, platinum. We have a high a week ago. On the high day, we have a bearish engulfing ER sell signal. Beautiful, exactly the reason why I built this trading system. We also caught that hugely profound one way back in March 9th of 22, 10 months ago. So this one could be extremely profound. So far, so good. Yesterday was the lowest low since the sell signal, and today's close is just barely higher. I think maybe a little shortcoming at the end of the week, of a down week. Next, silver, neutral momentarily, no signals, medium oversold, overbought, relative strength at 50-ish. So got nothing to go off of here, except it's losing, has lost upside momentum, and is now going flat. So you need a new high close above everything in order to regain strength, and probably several more up days after that. Or the downside correction might get down to say, 22, nothing major, but the trend is up. So I have to be friendly or bullish longer term. Next, sugar. Head and shoulder top. I got the neckline drawn in. It is, in this case, slightly downward slanted. And today we have a lower low since the shoulder high only on Wednesday. Now, it didn't close lower. That's not particularly important. It didn't close super strong or break out or do anything unusual. So I'm expecting it to start to slip more. The shoulder is a little in tight, closer to the head of the formation than I would have expected, but it is very close to the price range that I would have looked for, which would have been around 20 and a half, a little higher, a little lower. And this is 20 and a quarter. So not bad. Very possible head and shoulder top. Let's watch OJ and sugar in New York for how they progress with this pattern, these two patterns. Bonds down sharply. I still think this is all part of a longer term major bottom formation developing. I don't have much of a handle on it yet. Same with 10-year notes, but I'm very interested in beginning to predict a major bottom in the interest rate futures contracts. I can't quite yet, but I do like what I see so far. Now, the next week or two, maybe down a little bit more, not too darn much. I don't know if it's going to break below 124. I think it's going to start to go more of a sideways trading range and not much higher than yesterday's high. That could be it for a little bit, and maybe not much lower than 24 if it gets there in the first place. The 10-year notes are next, and basically the same commentary. It got overbought officially, so here we are going down pretty good today. No surprise. We're coming into a little bit of support. It's not particularly profound, but you need to pay attention to it. The trend may have changed. And again, I think this is building some sort of a much bigger bottom formation that is too early to tell what's going to happen. Next, crude oil. Slowly bearish. We got overbought a couple days ago. I don't think this rally is going to carry much further. I'd be looking for somewhat lower levels or a relatively calm sideways market for a bit. Neutral. Next, soybean meal got carried away. It broke out on the upside back in early December, but that, of course, caused an overbought condition. Retracement was just fine. It was right back down to a little higher than I would have said. That would have been a little more likely. But still, that's the retracement. New highs, now another retracement. Could be a little bit more lower for a few days, and then a new high for the move. The trend is up. I like it. Corn, neutral, big sideways trading range in here. Some people might say that looks like a pennant formation building. Certainly could be. It's pretty darn big. That involves most of last year. So a large, major long-term breakout should be watched for. Neutral for the moment to a hair bearish. We got overbought this week. So next, cocoa. New lows into support on a sharp break, and then a slightly higher market than yesterday's close at the moment. This looks like that the break is over. We also came pretty close to being oversold at the bottom of this break. So I'm in the midst of wondering if it's turning back up again. I'm neutral at the moment, looking for maybe new highs right away. Next, soybean oil. Big neutral like corn. We did catch the turning point very accurately to the low day on December 12th with our ER signals. That was a beauty. And by the way, way back at the bottom of December 15th of 21. So although the signals don't occur as frequently as I'd like, and as always as hugely profitable as they sometimes are, c'est la vie. Next, oversold 2 days in a row, starting to move up a little today. This is live cattle. It looks like it's ready to make a new high for the trend. I think the correction is over, and I'm looking for sideways to higher and a new high for the trend very soon. Next, natural gas, oversold, looking for a rally and a bear trend. In other words, sell the rally, look for sell signals. Next, gold, got a little overbought, and again, it's overbought today. Upside progress is minuscule lately as far as the series of highs are concerned during this week. And so I think it's getting a little tired. It is back in a little bit of resistance historically, and I would not be surprised to see a downside correction here. But the recent trend since September has been up. I'm neutral to a little friendly. Nothing major here. High-grade copper. Overbought, looking for a downside correction in an uptrend. Probably come back to where the horizontal line is at the moment, something around 3.965 area. Downtrend here in wheat. We got the top of the market because of the war way back in March to the high day. And that was very, very tricky for most people because of the whole series of limit up moves back to back, day by day, maximum amount higher. Limit up reminds me of the beginning of my career in 1972, the Russian grain deal. Next, oversold, and this is live hogs. I wouldn't be chasing this down by any means. I'd look for a rally to sell short. I'm bearish. Next, coffee, same comment, but we have had a little bit of a rally already, and I'm trying to find out if we're a little late at the switch to go short, but I'm looking for new lows here. Next, OJ we talked about, so I've covered all my ground. I'm going to talk about sectors real quick because we had so many fantastic sell signals, and just look for red a day or two ago on the daily price action, and there we are. IYE has now reached an official new short sale price level today, and we are trading slightly below that, so we have a tiny profit at the moment. Next, and we always have a stop, a protective stop, just above the high of the red vertical bar on Wednesday of this week, and it will start to move down automatically, but we won't see it on the daily charts. You only see it on the 1 minute charts that you actually make the trades on. Now, SMH, no signal. I do expect to see some weakness. It looks like its major historical resistance allowed it to get overbought, and now we're starting to slip a little. Next, bearish signal, official new short price has one more day to be reached. I'm looking for new lows real soon. Next, same comment. Next, looking for slight new lows. Next, support is trying to turn this back up again, but a broad double top and a lot of historical resistance could be a big problem. If it closes below 96, down you go. Next, officially short new sell signal Wednesday, reached our new short sell prices, and a small loss on the close at the moment, not closed. Nothing to say here. New short, looking for a tiny bit more strength, and maybe it already did it, and we're going to be unable on our new short prices. But ER1, remember, is always short on a red or green bar. ER3 waits for that retracement situation and may or may not enter a trade. Its signal may still be great, but you're not in a trade. ER1 is next. And I didn't want to do that. Next. No comments. Next. Bearish. Next. We're short officially. ER red sell signal. Next. Bearish, but oversold. Needs a little bounce. Then we'll make new lows. Next. Notice I don't have too much to say that's bullish around here. Because a lot of this stuff is given sell signals or is at resistance, and a variety of good reasons to believe that things are going to start to slide down, but we need to see it. Next, bearish sell signal on top of the move. Let's see this thing drop off a lot more. Next, no comment. Next, bearish, almost got short yesterday. That probably was it. Missed by a hair, but you know, close doesn't count, but in hand grenades, horseshoes, and nuclear weapons. So next, ER1 is short. We're missing the trade on the ER3. I don't think we're going to get it. And bearish. Next, same comments. Next, same comments, but we hit almost exactly the new short sell price today. Perfect. We have a small profit at the moment. It hasn't really started to drop down any significant amount at all relative to where we got short. So we need to see some weakness starting to come in here right away. Next. And that's it for these sector symbols. Forex real quick. Got overbought. A little bit of a rally today in the euro dollar. I'm looking for it to slip back down again because of the overbought scenario. So I wouldn't chase this market up by any means, and I'd be looking for sell signals, period. Dollar should show something in the realm of opposite. Today we have so far a rather unimpressive, but nevertheless, ER bullish engulfing key reversal officially. It just needs to close above yesterday's close, period. Otherwise, the green will disappear and we don't have the signal at the end of the day. This is based really on the end of the day developments. They can come and go during the day sometimes. It's fairly rare. Once I get red or green signals, they usually stay that way. But I've seen a few. And I've been doing this for over a decade, way over a decade. Now, dollar to the yen, nothing. We had a buy signal. We did buy it yesterday, significantly lower on the opening yesterday than the bid that we had placed after the close of the signal day. It closed with a little bit of a loss, but it came also very close to being stopped out, that red dot. We did not get stopped out. And now we have a profitable trade because remember, we bought it at the opening of yesterday and we're well above that. So all I can say is I need to see more strength. I'm bullish. I think we picked a turn here. I hope it acts better than the last time, which was good. Buy signal, retracement, got filled, closed with a nice profit on the first day, made more money in the second, and probably you got out on the third day with some sort of a profit, nothing particularly spectacular. That's the way my stops move. They move very, very quickly, frequently. Now, next is Aussie to the dollar. Overbought, sliding a little bit. I'm bullish longer term, but for the moment, we might see it wiggle around a little bit and maybe even make a little bit lower lows than yesterday, but soon it should be making new highs for the trend. Next is the US to the Canadian. We had a buy signal 2 days ago. Today, we're dropping down around the middle of the range. And I think yes, we're definitely long, but with a small loss. But I'm looking for this to turn around and start to make new highs. if you were inclined, for whatever personal reasons you may have, to agree with me about being bullish and the market's in the process of turning up, this is where you could consider buying, because your risks are smaller, you're closer to your protective sell stops, and your profits will be bigger if you're right. But we're close to the lows. We're dipping down for another day. It doesn't impress people that it's about to turn back up again as yet. We'll see. Next. Nothing particularly here. Bear trend. Next. Major area of support. Nothing here. We've already had a correction and got close to oversold. No comment. And that's it for Euro. And that's it for everything. Let's take a quick look at what the indexes are doing. And I got a fill just now. And we did drop sharply while I was yakking away about other charts. Yes, we did break below 391.50 like I was hoping, but the rally so far hasn't carried too high, maybe a little higher than I thought, and that was back into the middle of the trading range we saw for a few hours. As we speak, you can see that it's about to make, and it just did, a new low again. This is good. This is providing me with some ammo about the consideration. We're up 2.5 points on the day still, so far at the moment. It is currently 10:20 California time. There's a chance that this, and I would love it, would close lower today than the previous day's close. That would close the gaps. That would be testing resistance areas. That would be the end of a little rally. I wasn't quite sure how much it could pop up, and I would be very adamant about it starting to head down significantly next week. Again, I want to see it close lower on the day in order to have those comments look good, be confident in them. But I like to say what I need to say before it happens. That's it for today. You have a great weekend. Profitable trading to you. Stan Ehrlich. Bye-bye.